Welcome back. Let's get to the top stocks you need to watch this Thursday morning. Our research team is standing by with CNBC-TV18's list of top stocks for the day. And first up, the big one will be IndusInd Bank on allegations of insider trading. Ritu joins in with more. Ritu.
Well, SEBI has barred former IndusInd Bank CEO Sumant Katpalia, former Deputy CEO Arun Khurana and 3 other top executives for alleged insider trading, which includes Anil Rao, the Chief Administrative Officer, who's currently part of the executive committee overseeing the bank in the absence of a new CEO. Now, their bank accounts have been impounded for a total of 19.78 crore rupees, 14.4 crores of which is for Khurana alone, 5.2 crores for Katpalia and smaller amounts for the others. Now, SEBI found that they sold shares during the UPSI period without any purchases, avoiding significant losses, and all 5 of them have now been banned from dealing in securities and cannot move their funds or assets without SEBI's permission until final orders. The regulator is also probing others and says this interim order is going to remain in force until the investigation is completed.
Okay, all right, Ritu, got that. That's a really important story, and we'll dive a little deeper into that in just a bit. But there's more news coming in from Max Financial, not earnings, but it seems that there could be a change in the management. Vamakshi, good morning.
Well, good morning, Surbi. Well, that's right. Prashant Tripathi is expected to take an early retirement from his position as MD and CEO of Axis Max Life Insurance. Keep in mind that he has been at the helm since the last 6 years, and his retirement will come into effect from September 30th of this year. This news is largely negative, and that is because, there has been no clear succession plan that has been announced for now, and September is not very far away. We also have a note coming in from Jefferies, and they say that this development comes as a tad setback for the company. Smooth succession will be key, and an internal elevation may be preferred. However, they also add that sectoral tailwinds on regulations, some shift to non-par and healthy business growth can provide some cushion. They're expecting some correction, but they say that this could be an opportunity to add. As of now, they have a buy rating, target price of 1,700, but this development doesn't bode well for the company, therefore going with the red for this counter.
Okay, all right, Vamakshi, thanks a lot for that. Well, let's hop across to Mangalam. He's here to tell us about IRCTC and Bata India. Mangalam?
Well, for IRCTC, the results are pretty much on track. We have 10% revenue growth that has come by. The profitability has grown by about 26%. Margins steady at that 30% mark as well. We saw a boost coming in from other income. And their key segment, the key driver for earnings for them is the ticketing business, which saw near 9% revenue growth, 11% operating profit growth, so no problems out there. Catering business, well, the revenues were flat. There was a big jump in profitability out there, so that supported their overall business. And tourism, which saw a big surge year on year, my sense is that has been on account of Kumbh, 38% revenue growth and 161% EBIT growth on a favorable base as well. Bata, on the other hand, has been a tired set of numbers. I mean, it reminds you of a shoe that you've put in your cabinet, used to be your favorite some 5-6 years ago, but you don't get occasions to wear it anymore, but you still can't throw it. That's the kind of numbers that Bata has reported. 1% decline in revenues, about 2.5% decline in profits in EBITDA, and net profit has declined by about 27% as well. The company said volume growth has taken place this quarter, but importantly, they've gone ahead and reduced their inventory. So they are downsizing their inventory, and that's impacted their overall revenue performance. But just keep an eye out on how this performs, largely because over the last many quarters, these numbers have disappointed. There hasn't been that funk or spring in the step.
Mangalam, you touched a raw nerve there. A shoe that you don't feel like throwing out and you don't feel like wearing either. I have plenty of those in my cabinet, I can tell you. That's a great analogy. Thanks very much. Go back to Vamakshi then on Cummins. The expectations are always running low, but I guess, Vamakshi, it's beaten at least those low expectations.
Well, Surbi, when you look at the revenue, that has come in a tad lower as compared to what the street was expecting. The street was expecting some double-digit growth in the revenue, but this time around we're only seeing a 6% growth in the revenue, and that is because the domestic market was largely flat. It is up only 0.5% on a year-on-year basis, but what actually led the growth was the exports part of the business, because that saw a very good uptick of almost 39%. In fact, this is the second quarter wherein the company has reported a year-on-year uptick in the exports, given the kind of low base that we saw last year. But apart from that, when you look at the operational performance of the company, that has come in much better than what the street was anticipating. Keep in mind that there was a one-off in the base quarter, which sort of pushed the margins higher back then. But given that, the margins were expected to decline, but the decline in margins this time around has been not as worse as it was feared. So the margins have only declined by 235 basis points. The net profit too is taking a hit of almost 72.2%, but this is much better than what the street was expecting. Now, the management has said that they witnessed partial recovery in export demand. They're hopeful that the positive trend will continue, but they're quite cautiously optimistic as far as both the exports and domestic market is concerned. The con call is scheduled at 10, so we'll be waiting by for the management commentary and the guidance for FY26. But for now, it's an operations-led beat for Cummins.
All right, got it, Vama. Thanks a lot for that. Well, I'm looking at SAIL, and first look of it, actually, the numbers look very, very good, but there are a couple of adjustments you need to make. Nonetheless, even with those adjustments, the numbers actually look good. So to run you through the fine print on the top line, there's a big beat. The key reason for the beat on the top line is actually volumes, because volume growth came in at around 17%. They clocked 5.3 million tons. The sheet was closer to the vicinity of around 5 to around 5.1 million tons. So volumes are strong. But realizations actually were a little weaker than what the sheet was working with. First look of it, the EBITDA number looked very, very good, came in at around 3,400 crores. However, it included an element of the railway price increases that they normally get, which was to the tune of around 680 crores. So adjusted for that, actually, the adjusted EBITDA is mildly better. It's a beat of close to around 3 or 4% or thereabouts, not as a big a beat as it looked like at first look. Other expenditure as well was up only around 10%, while your volumes are up by around 17%. Tells you that the other expenditure on a per ton basis was actually down by close to around 5%. The kicker is that they've again reduced their debt by close to around a couple of thousand crores, close to around 3,500 crores. So release of working capital has played out as well. Going with green on this one, the stock has already seen a good rally, but these numbers deserve a thumbs up. Let's go to Ekta. Ekta's tracking a couple of pharma names. Ekta, take it away.
Well, yes, I'll start with Natco Pharma, which is in focus on the back of its numbers. So its revenue, EBITDA, margins as well as profit came in below what the street was anticipating. I'm working with two estimates, Axis as well as Nuvama. So it missed those estimates. It came in at around 1,221 crores. Axis was at around 1,431 crores. EBITDA margins 44.9% versus estimates of around even 55%, and profit of around 406 crores versus estimates of even up to 600 odd crores. Now the numbers were aided by Revlimid generic, which was expected. The formulation Q4 revenue was the key driver because of Revlimid sales, but that seemed to have missed estimates. The call is at 11 a.m. today, more details then. But if you look at it, based on these estimates, which the street was working it with, it's a little bit of a disappointment.
Thank you very much for that. I'm looking at Birlasoft. It's the last of the mid-cap IT companies yet to report numbers. It's a mixed bag. The top line has disappointed, but margins have positively surprised. So constant currency revenue growth has declined sharply, both quarter-on-quarter and on a year-on-year basis. Revenues down 5.3% sequentially, and on a year-on-year basis, revenues are down nearly 7%. But the good part is the company has managed to expand margins by 120 basis points to 13.2%, and that drove about a 4.5% increase in the company's profitability. There's a conference call which is actually currently underway. It started at 8 o'clock, so we'll await clarity from what comes out of it.
Okay, that's Birlasoft. Let's get back to Ekta. Ekta, Cohance, how did this one fare?
Well, you know, it's a lot of one-offs this quarter because it is a CDMO API play, but it is formed by the merger of multiple companies, inclusive of Suven Pharma. So the numbers are not really comparable. So I'm just going to go with the margins, which look a little disappointing on a year-on-year as well as on a sequential basis. It came in at 18.3% versus around 29% on a year-on-year basis, and the profit was lower as well. But the outlook seems quite positive from the management, so that's probably going to negate a little bit of the margin pressure. Overall, it's a moving picture really for Cohance, considering that it's the integration of multiple companies that we're dealing with. The CDMO Q4 revenue was up around 31% on a year-on-year basis. Their outlook, even for the specialty chemicals business, is quite positive. So overall, that should probably, cushion the stock, if nothing.
Okay, all right, Ekta, thanks a lot for that. Well, I'm going to be looking at Welspun Corp, and yesterday the stock, you need to note that it ended with solid gains of close to around 3% or thereabouts, though it's close to around 10% away from its fresh 52-week high. Well, looking at the numbers, it's good because just track the EBITDA number. You know, that's gradually been improving, and it came in at around 460 crores. That's almost the highest quarterly run rate that the company has ever achieved. So that's good news. Now, the guidance that they lay out, well, it includes the other income. But that guidance is very, very strong because they are factoring in an EBITDA growth of close to around 18% in FY26 in comparison to what they have delivered in FY25, which is again better than what they had guided for, both in FY25 as well as FY24. Now, from a net debt company, they've turned into a net cash company. They have a big capex of close to around 5,000 crores or thereabouts, but they have close to 1,000 crores of cash in their books, and they're throwing up free cash flows of roughly around operating cash flows of close to around 1,500 crores. They've also announced a new project in LSAW pipes in the United States because they're saying that demand is very, very strong. Put everything together, good visibility from here on, and good guidance going with green on Welspun Corp.
Okay, all right. Let's quickly recap then our list of top stocks to watch. The ones that have positive news flow are IRCTC, Cummins India, SAIL and Welspun Corp. Stocks with negative news flow, IndusInd Bank, Max Financial, Bata India, Cohance Life Sciences, Natco Pharma and Birlasoft. Okay, so that's our stock list for the morning. Let's now head across to Manisha. Talk about commodities and all the headlines coming in from the US courts now. Manisha, I don't know if that's more exciting or the fact that, by the way, oil prices have risen over 1% overnight. With all these OPEC discussions. Tell us more.
Oh, well, absolutely. The major headline, of course, comes in from U.S., from the federal court, ruling out Trump overstepping authority on imposing reciprocal tariffs. That is one major reason. And yes, the OPEC and allies meeting that happened yesterday, which winded down without moving anything really. They have maintained current quota in sense of their outputs there, and that has supported the crude oil prices. So we're trading above $65 a barrel right now. It was a good gain in the New York session, and the Asian markets seem to be building up on that. Having said that, the US dollar index has climbed over 100, and that seems to be capping some gains for many of these dollar-denominated commodities. Gold and silver as one, where we've seen profit taking come in for both of them in New York session as a knee-jerk reaction. But some opportunity buying really seems to be returning in the Asian markets right now. It is a lot of things. I mean, US federal court is one part of it, but if you look at the markets, it still is supply concerns coming in. Chile, the biggest copper producing country, has raised price projections for metals in this year and next as well on easing trade war tensions, supply disruptions that signal that the market is swinging into deficit, especially in case of copper. So after seeing that profit taking in the New York session, we've seen some buying happen in the Asian markets right now. So copper is trading in the positive. We've also seen silver prices gain up a bit. Aluminum has turned into positive as well. Zinc prices gained up 1% yesterday and are trading 0.5% up right now. So for overall metals and energy, it seems like a good start.
Thank you, Manisha. For that, we will get into a break. On the other side, we'll connect with Dipan Mehta of Elixir Equities for some fundamental stock talk. Stay tuned.